As the famous Larry Kudlow say, to profits are the mother's milk of investing. Alex, when you hear the word dividend, what is your thoughts on dividends, period? I mean, I know you're a young gun. You probably ain't thinking about dividends at the moment. What's your thoughts on dividends?
I think dividends can be a great tool, especially for people looking for high interest yields. I think they're a better alternative than to savings accounts.
Oh, absolutely. It's better than a savings account. Anything on God's green earth is better than a savings account. But for me, as like an investment strategy, we call it the passive money plan. Where do you think this fits in a portfolio when it comes to like dividends? Who do you think dividends more benefit or less benefit, during a certain age range, time range, or anything like that?
Yeah, I think dividends can benefit anybody, but probably retirees, maybe that's more of their aspect that they want to fall into because dividends, you only got to check earnings reports and, keep up with the company maybe every 3 months or so. So if you're in a good company that has a healthy dividend, then you're pretty much in a safe spot and you just collect that quarterly check, I should say.
So who do you think that it doesn't benefit more if you think it mostly benefits dividend? I mean, seniors that's in like retirement.
Who it may not benefit would be people that have a better vehicle to put their money into. Let's say business owners, if they can immediately pull in a higher yield, then, put your money into that rather than letting it sit in some dividend stock. That's the only way I would say, like, hey, maybe not have dividend stocks is if you have a better avenue to go.
So what you're trying to say is people who have more time on their life that can afford to take more risks, it's not probably advantageous for them to be in
Yeah,
dividends at an early age.
I would say.
That's what you're going for? Okay, yeah. So what Alex is trying to say is he don't like old people. That's what I got.
Kirby's the old person trying to defend this.
Right, exactly. I got to defend my crowd. I got to defend my crowd. Yeah, so with that, when in his dividends, and I mean for me, I think dividends are just good for everybody. I mean, especially if you start investing in dividends early, and then you reinvest in those dividends and letting that compound over time. When you get to that age, old like me, then you will benefit from it. It will subsidize a lot of things. But the thing is when if somebody that's, senior in age, 50s, 60s, and then they just start getting into dividends and they don't have a lot of capital to get into dividends, it's not going to benefit them either. So I think the only way dividends work, if you have a large chunk of money that you don't need, that you can set in a dividend vehicle when you're older, and then you can just live off the drip or live off the dividend that is produced. But for most people, in most cases, they'll have to start very early to build up that stockpile of shares so the dividend payment could supplement them in retirement. So I got what you're saying, but you just don't like old people. So that's fine. So with that, it's a lot of, we talked about dividend kings and aristocrats. And for people that don't know what dividend kings and aristocrats is, aristocrat is a company that has paid dividends annually and has increased their dividend percentage or the amount they pay in their dividends over 25 years consecutively. And then a dividend king is a company that has issued dividends for over 50 years, but also increased the dividends for over 50 years running. So if you Google dividend kings and aristocrats, and it's a long list of them, those are the more healthier balance sheets out there, especially in the S&P 500. And then a lot of those companies are in the Dow Jones. But if you just wanted to look at those companies that wanted to just to get an ideal or understanding of what dividend kings and aristocrats is, or maybe somewhere you wanted to park your money in a dividend king and aristocrat, that's a good starting point, jump off point. For me, when it comes to dividend investment, it's all about the income. Of course, I believe the dividends are way, way, way more passive than real estate, is way more passive than selling call options, is way more passive than what's it called? The bean stocks. I mean, it's more safer also. It's way more safer than running a business and things like that. But the key with dividends is you need to have a lot of shares or a lot of capital involved so the dividend payments are worth it. So that's why I said when you start younger, if you start building that war chest of dividend payments up, and then you reinvest in those dividends when you get to 65, then you have a war chest to live off of. But if you starting at 60, 65, 70 and you got maybe a social security check to use to jump off into this, then dividend payment is going to take a lot longer for you to have a nice income to live off of. But we might have one that the older generation can get in. So with that, let's talk about Neos. They have a new fund, but before we talk about the fund itself, let's find out what Neos is. So Alex, now first we're going to talk about the fund itself. Let's talk about the fund itself. Then we'll get little in Neos, then we'll go back to the fund and our pros and cons. But Neos came out with a fund. It's called QQQI. So with that, what did you find out about the fund and its performance wise as it's been on the market? So
Yeah, so I'm post a screenshot up here. So QQQI, the stock price kind of just stays flat for the most part, bouncing around from like 48 to 52 or whatever. But the dividend history, and it's a recent stock, so it doesn't have much history. For the past year and a few months, the dividend has paid out 60 cents per share on average every single month. So it comes out at a roughly 15% return on your investment annually.
So with the 15% return, and of course everybody's thinking was QQQI, so I'm guessing it's a derivative of the QQQs. The dividend payments on the QQQs is what, like 50, about what, $1 a year?
1%. Yeah, it's
Yeah,
lower.
so
It's very low.
yeah, so it's very low. And the thing is, and the madness behind it is they wondering, so how can they derive that money from the QQQs when the QQQs is not actually, the companies itself combined can't contribute that money? I know that's a question that I would have, and that is the first question I had when I found out about this ETF. But just looking at the history of it, and I'm looking at the monthly history, and then since the inception, it's up 18.21% annual on an annual basis. The QQQ index itself has been up 18.11%. So it's actually outperformed the QQQ, right? So that's an interesting factor right there for me also. And then when I scroll down, and like you said, the dividend history has been, for the history that they have, it's only been, this ETF has only been out since January of 2024. But when you're looking at the distribution history from 2025, the distribution is roughly around, I want to say about 1.1% a share. I mean, per month, the distribution about 1.1% a month. It looks like that has been healthy so far. But the question I got for you is, the only reason why this dividend is healthy so far is because we've been in the bull market this whole time, or what's your thoughts on that?
I mean, it would be hard to tell because there's only like a year of history on it. We would have to really enter a bear market to tell. But I mean, right now we can see that the stock is coming down, especially the market itself, and it still kind of stays within that range. Like, because it's a dividend stock, it doesn't have a lot of price action movement. Like, it might go up, percentage points. Yeah, 18% is a high yield, but dollar wise, that amount is just kind of, it looks like a, what do you call those hospital little, I must sound like an idiot.
The EK, the BB
Yeah,
thing? Yeah,
yeah,
yeah, I got you.
that thing. It just looks like that. So it doesn't have much movement going on. So I think it would be interesting to tell if we enter that bear market territory and see how it affects stock price, and if it even affects the dividend price.
All right, so for Neos, let's talk about the company that's behind this ETF. I mean, I'm on their website right now. It looks like it's a lot of techie stuff going on. They doing exchange traded funds, separate management accounts. They using sub advisory solutions. But what their plan is and what their strategy is they create ETFs and to deliver the new evolution of option strategy. So what they're doing is they're buying the Qs. In this instance, we're talking about the QQQI. They're buying the Qs, or they're writing cash secure puts on the Qs, and then they're seeking income is the outcome. So just like we do on our individual portfolios, we'll sell puts to bring in money, we'll sell calls to bring in money, and then that's the distribution. And as you know, the dividend stocks that you sell calls and puts on, the dividend is way higher because you have the dividend plus the weekly or monthly income that you're bringing in from the option strategy. So that's what they're doing, but they just doing it in like one-stop shop, you know. And of course, the more advanced you get into the investment strategies, the more research and stuff you got to do. So this looks like more, and I'm gonna finish reading this, but it says this is built on decades of research and experience. NEO's ETFs aim to empower the investor with a portfolio building block to provide high income tax efficiency and diversification through data driven option based ETFs. So the main part of this is, okay, yeah, we have some QQQ ETF. So we're going to ride a little bit. We're going to ride higher when it comes to, you know, the Qs and the science and technology and all that minus financials are going up. So we're going to ride that up a little bit, but we won't ride it up as much as the QQQ itself. But with our option strategy, we're going to do what a lot of people want, and that's to put more money in their pocket. I mean, yeah, it's great to be in the Qs and then it's riding up and then you think you're making money, but you're only making money unless you're receiving a dividend or if you sell. So this gives them kind of the best of both worlds. Because of course, if the Qs go up, let's say if the Qs go up 20% in a year, the stock or the ETF itself goes up 20% a year. NEO stock is not going to go up 20% a year. NEO stock may go up 5%, 10%, and then the other, 15, 20% that you're going to get is from the income from the dividends and not the actual stock appreciation. So you get best of both worlds. You get some appreciation, you get some income. Appreciation, income. So I think that's it's very different from when I started. We had these closed-end funds that couldn't even afford to even pay the dividend itself. I mean, it was just borrowing money to pay the money. And I used to jump in a lot of those closed-end funds, and I got crapped on every time. So it turned me off from dividend investing a little bit, but I didn't know dividend investing and income investing was two different things at the time. But yeah, I think it's an interesting strategy. What's your thoughts on the strategy of call buying and writing as a play in the ETF space?
I think, well, I mean, QQQ is one of my favorites to sell options on, especially SPY. I think having someone do it for you, especially for the complexity that it might be for certain individuals that don't have experience with trading options, but they want to partake in that income. I think a 15% yield is pretty good, especially since you are getting appreciation on top of it. I mean, we always talked about, selling options on QQQ. You get let's say the 15% yield on appreciation, and then you get maybe another, say 40%. So if you get this appreciation of say 18% plus 15%, you're at that 33% mark, and someone else is doing it for you. So it's not, I think it's a pretty good alternative to someone that wants to get income in that options field, but doesn't want to do the work.
Right, yeah, and then that's the part I do like about it. I mean, especially for people that's working, or they're not as savvy in the stock market, which is fine for not being savvy. Make it easy as possible on you to find ways to make money. I mean, that's why I like Dion. He always call himself the lazy landlord. I love it because that's what you want. You want to do least as possible to get the most money possible off the time that you have on it. I mean, just still going to Neo's website, and there's some interesting stuff on the website. So people look up neosfunds.com if you want to do more research on the company before. I mean, if you want to dive in or not, at the end I'll give you my thoughts on the whole ETF in general. But one thing it says, seeking high monthly income. We understand the importance of generating reliable income within an investment portfolio, which is why we believe investors should be able to maintain high expectations through varying market environments. So let's call it what it is. Since the inception of this fund, since January 2024 to now, we've been roughly in the bull market. We came down 15%, but we're still in the bull market phase. Now, if we come down 20%, 25%, 30%, now that's different. But it is letting you know that it's paying attention to the volatility of the market. So even if the market's going down, so just in the same illustration that we gave with the Qs going up, if the Qs are coming down, Neo's fund is going to come down also. Neo's fund is going to come down, but it will not come down as much as the NASDAQ. And then also, while it's coming down, it's still ways to make money selling, covered calls and stuff on that. So you're still going to get the income coming out. That is the dynamic or the diagram of what this company is trying to produce. For a lot of people, they only think they can make money when the stock market's going up. So it's giving you a different avenue approach.
Yeah, absolutely. And I'm just curious, I don't know if you're able to look, does this fund allow you to sell options against it as well?
That's a great question. I don't have my other screen up to see if you can sell options against it, but that's probably something we can do in the next video. See if that might be a tax strategy on top of investment strategy on top of a dividend strategy. So we gotta go look at that one.
That would just be stacking revenues. I mean, you're someone selling, this fund is selling options to pay you that dividend. And then on top of that, if you can sell options, that'd be even up.
Yeah, that'd be filthy, right? And then another thing about the tax efficient portfolio management. Managing the tax implication on your investments can be a big impact on the overall returns, which is why NEOs seek to take advantage of tax loss harvesting opportunities while utilizing tax efficient product structures. For people that don't know what tax loss harvesting is something that a lot of the big wigs in the stock market does. So what they'll do is they will have their winners and sell their winners, and it's usually close to that September, November, in that time frame, and you see a major dip in the market. And what you'll see big time investors do, they will sell their losers, the biggest losers, to offset the gains that they had. And then so they will sell those losers with the ideal that they have to stay out of that stock, or the portion that they sold, they got to stay out of that number of shares for 31 days. After 31 days, they can get back into that same stock at around the same price that it was when they sold it. And then they can still capture all those losses to offset their gains. So to try to limit their liability on the taxes that they'll have to pay on the gains. But 31 days later, they're still in the stock for the same amount of shares. And then, so they took advantage of the tax loss and they still have the shares and waiting for the appreciation to go into the next year. So it looks like this fund looks at that and understand that part of the strategy that a lot of people just don't know that's out there, and how the big wigs and people get around not paying taxes on investments and stocks and stuff that they sold over time.
Yeah, exactly. Yeah, this is one that's really interesting. I'm definitely going to be. I've already started to add a few shares since you mentioned it to me. Yes. So I mean, I'm not. I was like, let me start building position.
Look good, God.
It, I'm not wasting time. But it'll be cool to see. I mean, especially since we're hitting that bear market territory, maybe the price will become lower, and you can get in for a higher dividend yield. It's going to be interesting to see.
Not a, Yeah, now the crazy thing, it's not just more than QQQI. They got SPYI, they got QQQI, they got WMI. They also got Bitcoin high income ETF. They got real estate high income ETF. So they got a lot of different mixtures. The only one that came to my attention was QQQI, but of course, just researching the company, they got the TTLI. They got a lot of income strategies that they got with writing covered calls and cash secure puts on there. So, I mean, you got to check out the website. I mean, for me, all right. So overall, with the information you have, you already just admitted you jumped into some shares already. You ain't even messing around. So what's your thoughts? What's your thoughts on this ETF so far? Since you're already in it, what's your thoughts on it?
No, I mean, just the 15%, the fact that it's a stable dividend. Like I said, the history shows that the dividend is paid out 58 to 60, like 2 cents per month. The monthly aspect is great. A lot of people want monthly income, and I think they get tired or bored with dividends because you got to wait 3 months, get that check. And then you maybe have to come up with a strategy of, select 3 dividend stocks now to get monthly income, and they all pay different income rates. So finding one that pays out monthly at a high yield, higher than stocks that we know to be high yield, like Altria Group, that's probably one of the best dividend payers out there. But they pay every 3 months, So paying every month, I think, is a great way to collect dividend income. And that 15% is high. I mean, you start to, that's paying, let's say we always almost used Altria Group as an example every time to show what you would need in shares or capital amount to have a real income. 15%, it's gonna require half of that capital amount to see the same income. So that's also a great aspect to it as well.
Right. Yeah. No. And you're right. And even though we talked about the dividend aristocrats and the kings, the most I mean, besides Altria probably is the highest dividend payer out of those, out of that consortium of dividend payers. And the most you probably gonna get out of them, I think, is like 7-8% right now. But everything else is in twos and threes. You know, they had twos and threes. So unless you get a time in the market and catching one of these dividend kings or aristocrats at an all-time low, and then you still got faith that they're gonna hold up in a bear market, then really your opportunity to get 15% return is very minimal at best. For me, I like the ideal. I like the concept, especially the writing the calls and puts. I love the ideal and concept. For me, I'm gonna hold off a little bit. I mean, I'm not gonna be like Alex. Alex, all gas, no brakes. The only reason why I'm holding off is not because I don't trust it's not that I don't trust the company or anything like that. I mean, I'm gonna keep doing research on the company, but for me, I got to see how they do in both sides of the market. Now, if they hold serve, and then let's say we get a downtime, and of course, we probably couldn't have another downturn in the market for another 5-10 years, then I'd just be SOL, right? But for me, I like to see more history on an investment before I jump in. uh, for me, I would jump in at the 2-year, 3-year mark if we could go through a bearish situation in the market. And I'm not talking about this 10-12% down. I mean, harder than that. And then they're still maintaining, they're still able to, that volatility is still there for them to write those calls and write those puts and still be able to derive that same amount of income. Of course, the market's been going straight up since January 2004, so the volatility is higher. So of course, you can write that 15% return per year, but can you still generate that alpha when the volatility is not high and then the market's been down and in the low? Now, of course, if it goes straight down like the V-shaped recovery we had during COVID, then the volatility will still be there. But if we go down and we can sit there for a couple months in a down situation, and that volatility dissipates from those options, will they still be able to generate that alpha? And that's the only thing I'm waiting on, just so I know how they actually act. I know what their thesis and their company model is, but I want to know exactly how they act in those situations. And to be honest, to play both sides of it, to make money in the upside and the downside, I could do a pairs trade with QQQI and then probably the TLT or something like that, just to get best of both worlds. But I like, me, Alex, I like to have a big position in one area, and I ain't trying to be counteractive to the other one. So that's why I'm gonna hold off for a little bit. Of course, I'm gonna be looking over your shoulder like, hey, Alex, what you doing over there? Can I borrow $5 from you? So I'm be over there doing that. But yeah, I'm gonna hold off for a minute, and that's the only reason why. But the concept and everything that they're talking about is great. But we've heard a lot of things that sound great that didn't come to fruition. So I just want to see it in action before I decide to sell a kidney or something, buy something. You know what I mean?
With that said, though, guys, let us know what you think. If you've heard of QQQI, let us know down below. Don't forget to like this video, share, subscribe, send us content to our email address, and we'll see you guys on the next one.